Hey guys, I welcome you all to WhizkotUK. Kindly do this for me. If you haven't subscribed to this channel, I'm pleading with you. Kindly click on the subscription button and turn on the notification. You'll be the first person to be notified when we release video. As you are aware, we talk to experts on things that you need to know. All the answers that you are looking for, we will discuss it here. Today, I'm going to talk to Mr. Gerald from GKD Service Limited. He's an insurance consultant and a broker as well. All the answers you need concerning insurance, stay tuned as he throw more light to it. Welcome to the channel, Mr. Gerald.
Thank you very much. I'm glad to be here.
Nice to have you.
Likewise.
That's why you schedule. Mr. Gerald, you're busy.
Yeah. I know it's been a while, but
So I think today is insurance, guys. We're gonna ask all the questions. It is estimated that around 30% of people in the UK, that is around 20 million, have life insurance. So what's your mindset about insurance, and do you even trust the insurance system?
Thank you very much for the question. Insurance is all about transferring your financial risks to a company called insurance company. So when it comes to insurance, it gives you that peace of mind. And you're back to your question, life insurance. Before I talk about life insurance, I want to talk about the types of insurance to make it clear. So there are two types of insurance. We've got a non-life insurance, that is the general insurance that is insuring your building, your car, your assets. And life insurance is insuring human being. That is called a human insurance. So with life insurance, it depends on who needs life insurance. Life insurance is basically taking a life cover of a human being. So for myself or for yourself or for your partner. So that's what life insurance is for. And when you're taking life insurance, you have to know what you are taking the cover for. Are you taking the cover for debt? Are you taking the cover for just covering your dependents? So I keep on saying that if you are single, you don't need life insurance.
Oh, is it?
Yeah. Because you don't have any beneficiary that you'll be transferring, they're going to pay out to. But if you are married and there are kids involved, you may need life insurance. But you can take life insurance as a single just for taking life insurance because the payout to go to, maybe you have to nominate somebody that the payout to go out to your parents or somebody else, but it can go out to your children or because you've not started a family. So, yeah.
Oh, okay. Wow. So in terms of age, at what age should someone consider having a life insurance?
So with the age, you can consider if you finish uni, you started your career, you can consider having life insurance because that's the around maybe 23. You've come out from uni, you're going to buy a house. So perhaps you've got a debt, it's good to have a life insurance because what you need to understand that the debt, if you die, the debt is not written off. The debt, they'll come after your beneficiaries. So they come after your families to pay their debt. That's what people don't know. So the debt is not written off. So at an early age, the earlier you take the life insurance, the cheaper it is. So I recommend you to take it at an early age, maybe 23, 20. It depends on if you started a career, you started working, you can take a life insurance.
But I think based on your previous answer, you said you should only take a life insurance when you have children or someone depending on you. So as you know, 23 years, most of us from Africa, we are in school age, even most of us will be unemployed at that stage.
Yeah.
Do you still insist that around 23 years, someone should consider life insurance?
Also, if you've got a debt, you should have a life insurance that will cover those debts.
Well, what do you mean by debt?
Debt is maybe you're buying a house, mortgage.
Okay.
So no, basically, life insurance traditionally was taken at the back of a mortgage. That's what life insurance was taken. It's not just back home, but here. If you're going to buy a house and the bank is going to borrow you money, they will ask you to take a life insurance just to protect the debt. So should in case you are not there, you pass away, the life insurance policy will pay out the debt that you owe the bank. So yeah.
So that means it's true that life insurance usually designed to pay out when someone dies. That means
correct. That is basically that's what it's for.
Oh, is it?
Yeah.
Guys, so that's it. I think a lot of people are asking me this question. Is it even worth it considering life insurance because it only pays out when you die?
So there are two types of life insurance. So we've got the whole life insurance and the term life insurance. With the term life insurance, you take it over a period. So age 20, if you take it for age 20, you can cover it up to like 40 years. So
Okay.
age 60, something like that. Or the whole life insurance, it doesn't have an end. So the term life insurance it has an end. So if you take that term life insurance at the age of 60, the policy will expire.
Okay.
So that's at the term life insurance. But the whole life insurance, which is quite expensive, it's until you die, the policy will pay out. And within that term life insurance, under the term life insurance, we've got what is called a decreasing term insurance. We've got the increasing term insurance, and we've got the family income benefits insurance. With the decreasing term insurance, as I said, if you take a mortgage, normally it's taken at the back of a mortgage or when you die. So if you take a mortgage under the decreasing, whilst you are paying your mortgage, the life insurance, it comes to zero. So it's decreasing.
Oh, okay.
Yeah. So the premium also reduces whilst you are paying your mortgage. The increase it goes up. So that one is taken to transfer wealth. If you want your child to go to a private school, you want your child to have the best education, that life insurance is increasing. And when it's increasing, it pays out a lump sum because the sum insured is increasing. And the family income benefit was introduced because some people, when they pay them £1 million, they become overwhelmed. So they decided to give them, it pays out regular. So we agree with you. A year will give you like 50K to meet your needs. Then every year we'll try to give you, if it's 50K, that's £50,000 I'm talking about. If it doesn't meet your needs, then you 70. So that's the but yeah, basically life insurance is taken when you die, it pays out.
Oh,
Yeah.
okay.
So it's not paying out because of you. It's paying out for the people you are leaving.
Those
The
who
partner,
depend on you.
will depend on you. So your wife depend on you. Anyone who's going to miss your income, depending on you, if he's going to miss your income, that's why you need life insurance. So if you're not there, your wife is going to miss your income. So you need life insurance to pay out to your wife.
Then
And pay out to your
everyone needs to have a life insurance.
Everyone deserves to have a life insurance. It's the best thing. It's called, and when you come to this country, it's called a generational wealth.
Okay.
When you realize that some people, when somebody passes away, they become very wealthy. The reason why they
It's
become
true.
very wealthy because they got a lot of life insurance.
Oh,
It's £1 million. The wife's house is the husband will have it. So if both dies, they get £2 million, and it goes to their children. Generational wealth.
Oh, I think I'm more educated today, to be honest. So I think for you to choose that, on the market there are several life insurance. All the term they use for, is it holders or companies?
Yeah, companies or providers.
Yeah. Fantastic. So when you want to have a life insurance, so what are the basic things you need to consider before choosing a company? Because there are several companies on the market today. Before I was preparing for this interview, I went through the internet. I saw a lot of companies. So what are the few things you need to consider when choosing a company?
Yeah, with life insurance, it's a specialist area. You don't just go on the internet to do life insurance. Reason why I advise, because you have to go through an advisor.
Okay.
Because it takes their subjectivity, their condition. You need a specialist to run through the codes with you with life insurance, because you may go on the online to do, but you may not have the right cover with life insurance. So that's where the challenges is. So things to consider. First of all, I advise you go to an advisor,
Okay.
a specialist who knows life insurance, who can advise you. Because if the advisor advises you wrongly, you can sue them. That's the benefit of it. So if I advise you wrongly, you can sue me up to my cover. So I've got something that protects me. If wrongly I advise you, it protects me it's when you sue me, that will pay out for you. So life insurance, I don't really advise people to do it online. General insurance, car, house, and you can do it a bit of online, but for life insurance, you need an advisor to go to, because you have to go to the medical check as well. And that medical check will liaise with your GP to get the information. So you have to be truthful. So I'm going back. Insurance is based on 3 principles. One is called the premium. So the premium that you pay to the insurer.
Good.
2 is ultimate good faith. Ultimate good faith is that what you tell me is what I'll give to you. So insurance, I say, tell me the truth to the best of your knowledge. So the third one is insurable interest. And the insurable interest is you should stand to lose. So you should have a financial loss on the product that you've insured on. So for myself, an example I'm going to use is that I like Formula One. But if Lewis Hamilton crashes his car, I can't take insurance on him because I'm not going to stand to lose anything on it. So you have to have a financial loss on the product that you're taking the insurance on. So yeah, that's the insurable interest. So these are the three principles.
Okay. Your first principle was a premium.
Yeah. Thank you very much. Yeah, so the premium is what you pay monthly or you pay annually. So that is the cost of the insurance that you're paying for. And so there are a lot of factors depending on the product. So I'm going to use a simple example like car insurance because a lot of people relate to car insurance. So when an insurance, if you are looking for a car insurance, the factors that relate is the type of car that you are buying, where the car will be kept,
Okay.
Who is driving the car. The other thing is how many people will be driving the car. What is the car used for? Would it be used for occupation, that is commuting? Because a lot of people don't understand that when you are commuting from your house to work, that is commuting. So a lot of people insure their car just based on social, domestic, and pleasure. That means that you're just doing school round, you're going to the shop, you're not commuting to work.
Okay.
But what you need to understand that insurance company can find out immediately you decide to make a claim, they can find out that you'll be commuting to work based on the mileage that you are making. So it's based on, so you have to be truthful to them. So they ask you how many mileage do you think you're going to make within a year? Maybe 5K, maybe 10,000 mileage within a year, so it means that you're commuting more often with your car. So based on that and your age as well, there are some insurance. If you are young, you are high risks
of paying.
So so high risks, you are paying high premium, especially if you are driving an expensive car. Some insurance may not even take you on. So yeah.
Okay. Ajay, so do credit score affect your premium?
Yes. So credit score affects your premium and it's also based on two types. So we have the soft search.
Okay.
When you go online and you apply, that one doesn't affect your premium. When you decide to pay by installment, that is the finance. So the premium, you can either pay monthly or you pay it annually. So if you decide to pay monthly, there's a company that takes that responsibility. They are called closed premium finance. They are going to finance the monthly installment for you. So if you decide to go for the monthly installment, that is where they now go further. They call the hard search. So that one will affect your credit score. If you have a good credit score, it is not going to affect it because what they just want to make sure is that is this guy responsible? Is he capable of paying the premium? Some people don't have a good credit score because they don't pay, they miss their payments, especially mobile phones or whatever bills are their business. So if you don't have a good rating, they'll say, okay, no, this guy, he doesn't have a good rating score, so they're not going to give you that finance company for you to finance your insurance. Okay. So that's why the question that we always ask when you're starting insurance, the question that we ask, have you been bankrupt before, all those kind of questions.
Yeah.
They know it. Sure. They know it, but they want you to tell them because we have a software that tells us everything. But that's why I keep on saying that they want you to tell them the truth. If you tell them the truth, you get the best cover. Whatever you give, garbage in, garbage out, whatever you tell them. So when you decide to go and make a claim, and you don't tell them the truth, now they will open your file. When I say they open your file, we do investigations. So we start doing the investigations and we know that you didn't tell us the truth. And that's why they decided to pay the claims. After insurance works.
So let's talk about the various products of insurance. I think most of us, what I think we know of is life insurance. Are there any other products?
Yeah, so under the human insurance, which is the life insurance, we've got life insurance, income protection, critical illness. Income protection is when it pays us when you are not able to work. So what you are trained for. So if you're a nurse and you are trained to be a nurse, if you're not able to work, the income protection will kick in. It's one of my favorite policies because anyone that has income protection, it just kicks in automatically. It pays you and it doesn't expire. What insurance company wants to do is that once it kicks in, they want you to go back to work. So they give you the best treatment.
Okay.
The best physio, they take you to the best hospital. And when you go back to work, the policy starts again. So you can claim on it as much as you want. The second one is a critical illness. So critical illness normally is for young people if you don't have any dependency. So I always advise you take income protection to protect your finances, to protect your income. Critical illness, if you are sick, critical illness will cover you, stroke, cancer, these serious diseases. Critical illness will pay out for that one. So yeah. And that's the, and when it comes to general insurance, that's why a lot of people know the car, the building insurance, the private medical health and all those things. So that falls under general insurance. So there's a lot of insurance products out there.
I think, to me personally, I think I'm more interested in the income insurance.
Yeah.
So when does it start paying?
Yeah, so a lot of corporate firms, they cover income protection. When you look at your contracts, they cover your income up to an amount. Yeah. But you can also take income protection for yourself. So you can take it to pay out. So there's something called a deferred period. If you want it to pay out within 3 weeks, you off work, it will pay out within 3 to 4 weeks, you off work. Or you can take it for maybe 3 months for it to kick in, because maybe you have a savings that you can tap into it before the income protection kicks in. And the income protection pays up to 70% of your income.
70%
of your income, tax-free.
Wow.
Tax-free. So that's the benefit of it. There's no tax on it. It pays 70% of your income tax-free. So that's what Kevin says, it's one of the best products. And I advise every young person to have income protection.
So that means I'm unable to work for a period of 1 year.
Yeah, it will pay out. It will pay out until you go back to work. That's how income protection is. It can even pay out until you don't go back to work. So that's what I said, income protection, you can take it for a 2-year period, or you can take it for the whole of your life. So I know clients that they fell from their builders, so they fell from their ladder, and since they've broken their back, they can't go back to work. So now they agreed that income protection to pay $5,000 every month, and it's going to pay out
tax-free.
Tax-free.
No, shall I get my details? Yeah. Then let me register for the income protection, because
it's one of the best products. Income protection is one of the best. A lot of people, it's not expensive as well. It's just the best.
So let's say on average, like per what you are saying, people might be thinking that you have to pay a huge sum of premium. On average, let's say on average, how much you gonna pay monthly?
£30.
£30.
You could pay £30. £30 for 3K every month.
Wow.
It's no brainer. Yeah. No brainer.
There's this question like I want to just be fair to myself and my colleagues. Also, is it necessary? Because people are of the view that it's always a hidden terms and condition, that there's always a hidden terms and condition. No matter who you are, you might not know. Is it necessary to get a solicitor to read through your policy before commencing or start having a policy?
You don't need a solicitor to read your policy. So professional, I'm a broker. So that is what I'm here for. I need to advise you. So you come to me as a client. If you want an insurance, you come to me. I go to the market, I recommend the products. Before I recommend the product to you, I look at what is called subjectivity conditions, that is small print. So the insurance company is saying that if you don't do this, I'm not going to pay.
Mm-hmm.
So that is where the problem is. A lot of time, we don't have the chance. We don't look at the policy. They say, read the policy schedule. That is the document. They add you and they say, read it together with the policy wording. So the policy wording, that's where the small print are. That is where the terms and the conditions that people don't look at. So I'll just give you an example. So they'll ask you that, the question that they'll say that, house insurance, they'll ask you a question. Your house insurance is close to, maybe you have a flat roof in your house insurance. House insurance is rated based on the number of bedrooms. So they'll ask you a question, how many bedrooms have you got in your house insurance? You say, okay, I have 3 bedrooms, but I have a small room, which is a box room. It is also another bedroom. So once a bed can fit there, so your house is rated on a 4-bedroom, but you told them 3 bedroom. So if they come, if anything happens, you want to make a claim, and they ask you how many they come and see, so they are 4-bedroom. You give us the wrong, so you'll be paying the premium based on the wrong information you're giving to us. And the other thing that you see, that maintain your roof. So if you've got a flat roof, when it rains, the water settle on it. So they say you have to maintain that roof. Make sure that every year you clean that roof so that the water doesn't settle there.
Yeah.
The condition is that if you don't maintain that roof and the roof caves into your distance, they're not going to pay you. So there's a condition to all. So you don't need a solicitor to read it. You have to sit down and read the document. And if you don't understand anything before you sign the contract, legal documents, you need to go back to your broker or whoever you bought the insurance from to explain it further to you.
Mr. Gerald, sometimes like 30 pages of
Yeah.
policy. You just have to read through this
Yeah.
line by line. And okay, you need to just read through it and sign maybe in the next 2 days. But 30 pages, Mr. Gerald.
Yeah.
So that's why I'm asking, like, if you need an expertise. So I've got to know that you need a broker.
You need a broker.
Which you are to go through with you. So what, let's say in the near future, like I want to make a claim, the insurance said no, we are not paying you because you didn't provide us with the honest information. Whom do you go back to?
So,
is it to the broker?
Yeah. So if you did it through the broker, come to the broker. Because the broker is, because if I recommend a product to you, as I said it previously, if I recommend a product to you and I didn't give you the right information, you can come back to me. Because I'm asking, so what a broker does, a broker acts on behalf of the client, that is called the insured, and also acts on behalf of the insurer. So I am an agent acting on behalf of you. So I'll make sure that you have the right product. I'll make sure that you have read the document, you understand it before we go on cover. So
okay.
Yeah, so that's what a broker is there for. I know it's a lot of pages, but we have to take the time and read, because I keep on saying that I've been in this industry for years. Your policy is always tested when you make a claim. If you don't make a claim, you don't know whether you have the right policy. The minute you make a claim, you will always know whether you have the right policy or you have the wrong policy.
Your policy is always tested when
you make a claim. Yeah.
Wow. So this payout, is it taxable?
Oh no, it's not taxable. It's tax free.
Tax free.
Yeah.
Is it all insurance?
Yeah, all insurance. You don't need to pay tax. The government is not going to tax you on that.
I think the insurance is a must, to be honest. Like everyone is insurance.
Yes.
Either life, but I'm more interested in the income insurance, to be honest. I need to, because 30 quid a month.
It depends on how much you want. If you want 5K, yes, it has to be more than that. But basically, the average premium you'll be paying is £30, depending on what cover.
And can you request more than the amount you are earning monthly?
Oh yeah, you can. So it's based on what you are earning. But if you want more, you can. But you're going to pay more premium for that.
Okay, I get it.
If you want more, definitely you're going to pay more premium for that.
So, Mr. Gerald, a year ago, I lost my mom, and I think you do understand, if you lose a relative and you are here, you know the financial burden. So, is there any product for people living here in case such unfortunate situation do happens to them?
Yeah. Thank you very much. Yeah, there's a product that was introduced by Enterprise, insurance company based in Ghana, and the product is called uncertainties. It's a funeral policy for diasporas, those for Ghanaians living abroad. One of my best products as well, because we know the burdens when it comes to funeral policy, and Ghanaians, we spend so much money when it comes to funeral, and it covers up to 4 people. You can cover up to 4 people on that policy. The policy is based on the age and the amount that you want to be covered for. So the age, the amount ranges from 10,000 Ghana cedis to 70,000 Ghana cedis. 70K, which is a quite good amount for someone to for a befitting burial at home. So yeah, it covers, and the policy has every funeral policy has a waiting period. So there's a 6-month waiting period on that policy.
So with the premium, are you paying in cedis or in pounds?
So you're paying everything in cedis.
Okay.
You pay everything in cedis. So if you are here, what we do is we send you a link and you pay, and it converts to cedis. Or you can set up what is called a direct debit back home if you have an active bank account, which I normally advise people, because we still have our roots back home. So you set up a direct debit.
So with the age, do you have a cutoff?
There's no age limit. I've got a client that is 100 years.
So when you are making a claim, what are the requirements?
So the ID is a requirement. The funeral certificate is also a requirement that we need as a proof. We need who you want us to pay the money to. So the trustee, if whoever you want us to pay the money to, we need them. So before you go on cover, we will take those details first, apart from the death certificate.
You made mention that it covers 4 people.
Yeah.
Can it be friends or only relatives?
So it's relatives, family members,
Family.
extended families, and relatives.
Oh,
Yeah.
okay. And the age wise, so it covers.
So at the
all
age, so your
ages.
spouse, if it's your family, extended family, your family, your spouse, you can cover from age 18. Your children, you can cover from 1. You know, your case, if you want to cover your case, you can cover from 1. But extended families, you can cover from 30 going, and the cousins and all this thing.
I think it's a nice idea, to be honest. If
Yes.
I knew this, to be honest, was when I lost my mom, it's a huge financial burden.
It is.
Guys, so I'm talking to Mr. Gerald from GKD Service Limited. He's an insurance consultant and a broker as well. You can see on your screen, that's his number. If you want anything concerning insurance advice, just call him. Anything to tell my viewers before we sign out?
I just want to say that insurance is very, very important. Insurance is not an investment. It gives you that peace of mind. If you know that you have that peace of mind, you know, you never get worried, because we cannot prevent uncertainty. We cannot prevent disasters. You cannot prevent it. So it gives you that peace of mind. So I'll say that if you want to buy insurance, it's good to go to an advisor and get the right cover in place. Thank you very much.
Thank you, Mr. Gerald.